how one of the largest UK banks collapsed. North Rock had grown from a merger of several small regional building societies into the region's largest company in just over 30 years. With a turnover of more than £5 billion, roughly the same as Nissan today, it would also become a major player on the national banking scene, joining the FTSE 100 and completing impressive new offices in Gosforth and Rayton Bridge. Beginning of the collapse. All of that was to change on September 14, 2017, when a story on the 10 o'clock news set in motion a chain of events that would affect nearly everyone in the Northeast in some way. The Rock had applied to the Bank of England for emergency support to help it through a liquidity crisis caused by a subprime mortgage slump in the United States, according to Robert Peston, a then unknown BBC business editor. Queues of customers desperate to get their hands on their life savings informed outside Northern Rock branches across the country by the next day. There had been some warning signs. The Rock issued a profit warning in June, highlighting the rising borrowing costs it was facing, causing its share price to plummet. 2 months later, it was forced to deny receiving a £341 million Bank of England emergency loan. But it was September 14th that Northern Rock jumped off the city pages and became a name synonymous with bad business. The nails in the coffin. Almost 4,000 people at the bank would lose their jobs over the next few years. Shareholders would see their investment dwindle to nil. And because 3/4 of employees owned stock in the bank, many would lose out twice. The Northern Rock Foundation, which gave away 5% of the bank's profit to local charities, had to reduce its support for those organizations and eventually shut down, as government bailouts for failing banks piled up. The austerity agenda that has once transformed public life was set in motion. The Rock's demise was also a blow to Northeast pride, as one of the few companies in the region that had taken on the city's big boys was now seen as a source of a national economic crisis. When the Rock CEO Adam Applegarth, Chairman Matt Riley, and 2 other directors were summoned to testify before the Treasury Select Committee in October, the knives were definitely out. This was not banking, on PM said. This was a heavily leveraged interest rate bet. 15 years on, time has not been kind to the MPs who queued up to tell the Rock that it was the only bank in trouble, something that would soon be proven to be incorrect. One MP even cites Hobus, who was eventually bailed out, would dwarf the Rock's assistance as an example that the Rock should have followed. With only 70 branches accepting cash deposits from depositors, the Rock did not have enough of its own money to expand at the desired rate of growth. Instead, it turned to centralization, which allowed it to borrow money from global markets in exchange for future income streams, allowing it to offer mortgages of up to 125% of value of the home and 5 to 6 times the applicant's salary. Those arrangements were heavily criticized in the immediate aftermath of North Rock's failure, but it would become clearer within months that Northern Rock's problems were far from unique in the banking sector. Lloyds and RBS would require government bailouts, while American behemoth Lehman Brothers would go bankrupt. Northern Rock's level of risk-taking would pale in insignificance in comparison to some banks, where PPI, mis-selling, the LIBOR scale, and a slew of other rotten practices would soon be exposed. Northern Rock was divided into a good bank and a bad bank, with the Rock keeping the safer parts of its mortgage book and the riskier parts going into the government-controlled UK asset resolution. The names of the 2 institutes were incorrect, with the bad bank outperforming the good bank for many years. What does Northern Rock look like now? Despite the enormous cost to so many people, the Rock survived until it was purchased by Virgin Money in 2012. The new Newcastle-based institution now employs over 3,000 people, constantly reporting record results. Is a Northeast institution challenging the London banking establishment? Virgin Money CEO Jane Ann Gadhai frequently attributes much of the bank's success to its staff in the Northeast, and Northern Rock's survival may be traceable to its presence in the region prior to its troubles.